It's a real pleasure to be here. Thank you for having me. It is true that I not only offered Mark Zuckerberg $1 billion to buy Facebook, he agreed to accept $1 billion. Unfortunately, some other events transpired between that conversation and the signing of the deal that led us not to move forward, but we still remain on good terms. As Steve mentioned, I've spent a lot of the last 5 or 6 years in the fields of renewable energy, energy efficiency, and other resource areas, including water and waste. I spent a lot of time as a partner at Virgin Green Fund. We're a private equity fund based in London and in New York, where we invest in the clean energy and resources sectors. We manage about $450 million of investors' capital, including capital from Richard Branson, as well as other institutional investors. When I was asked if I would come here and help moderate this panel, I was really thrilled. So I thought I would just start with a little bit of setting the scene in terms of the backdrop of what's going on in the industry globally. I'm not an expert on the Northern Irish energy ecosystem. I know one or two things, but I don't want to embarrass myself by saying too much about it, because we have obviously have some people here who will be able to be much more eloquent on the subject. But I think overall, the clean energy sector has gone through some very difficult years. The last certainly 4 or 5 years, the world economy has clearly, and that's had a big impact. But even notwithstanding that, some very specific factors related to the clean energy industry. I think the total investment last year was not insignificant. I think it was around about $260 billion globally of investment in clean energy. That was down about 12% on 2011. Solar accounts for about half of that. Unfortunately, it's not very applicable for this country, but it's certainly booming as an industry, about $140 billion of investment last year in solar alone. And wind is the next largest sector, about $75 billion. The issues, I think, are well known around what's been going on in the sector. A lot of it's been driven by policy uncertainty, particularly by Western governments who've been thinking about their budgetary issues and whether or not they can afford to support these industries before they get to be cost competitive. There's been significant overcapacity that has been built out on the manufacturing side in solar. The Chinese solar industry has hundreds of producers, and many of them are selling well below cost today because there's just too much capacity in the market. You'll see a massive consolidation happening. It's already started in the solar sector. Same in the wind industry. I think there are very few. There's one remaining wind manufacturer in Europe, Vestas of any size, and that will continue to consolidate. I mean, that's great from the perspective of people who are actually installing this capacity, because prices have come down. Solar prices dropped last year by 23% alone. It's a massive drop. I mean, not the year before, it was over 20%. So benefits the consumer, benefits people who are on the utility side of things. But if you're actually upstream, it's been much more challenging. Wind turbine prices also have dropped, particularly on the older machines. The newer ones, prices have been higher, and we'll see how they perform so that we can understand the value and the cost of energy from those new technologies. China continues to set all records. I think they did around $68 billion of total investment last year. So up 20%. And China in some ways, has had a very directed strategy around their whole, their 5-year plan around renewable energy. Something that I think, we can certainly, as a small country, be thinking about how much impact one can have if one has a very thoughtful plan at the center. The other major emerging markets have been investing significantly. So I think now 35% of total investment has come out of Brazil, China, India, and South Africa last year, which is a big share compared to what it has been. The US market, I think, was down a third last year in terms of investment in clean energy. A lot of that's due to policy issues. In Italy was down, I think, 50% because, again, subsidy changes and so forth. So a lot of impact on the sector. We all know how much government support has an impact on the sector. I think the only sector that grew was small-scale hydroelectric, where it's the most cost-effective technology of all the energy technologies, including coal and natural gas. And in mountainous countries, we have a few mountains here, not so many, but certainly it's a very attractive technology. I think the biggest project in the UK last year was the Links offshore wind project that was financed. I think that was the leading project. On the other end of the spectrum, people like us investing in startups that are developing new technologies in the clean energy sector, investment's gone down significantly. I think that the investments were down about 20% last year in sort of early stage companies, and even more market, I think, just in Series A companies, so first round financing companies. I think investments, there are less than 100 companies that were financed globally for Series A stage. So clearly, there's been a lot of learning over the last few years. I think there's the risk appetite has reduced significantly. I think we've learned a lot because many of these technologies are, they take longer to become mature. I think some of the expectations early on in the sector were that these companies could move as quickly as software companies or internet companies. It's just not true. It's not possible. These are regulated industries, and the timelines are just very different. So from this point of view of early stage, and we're growth stage equity investors, the industry is being much more circumspect and very careful about what's being financed. But at the same time, many of the technologies are very mature today. So I'm not sure that to meet many of the goals that we'll hear from the Matrix report, there need to be any development of incredibly new innovative technologies. I think there's a lot of existing technologies that can be brought together, and we'll have that conversation to actually help design the new energy system for this country. So we'll hear more about that from the panel. Just a couple of thoughts on, a lot of people think renewables still are uncompetitive with traditional energy. Just the baseline coal and natural gas, depending on which country you're in, you're talking about £60 a megawatt hour. It varies, but that sort of, globally, that's sort of a midpoint. It can go plus or minus 20%, but that's sort of the base, £60. Onshore wind is absolutely in the same ballpark, around about £60. Again, depends on the country and the cost of capital in those countries. It's very competitive, and that's not taking into account carbon price, which if you add that onto coal or natural gas, those technologies are less competitive from an economic perspective. On the other end of the spectrum, marine wave or tidal technologies, you're talking about £600 per megawatt hour today, so 10x. Those clearly very immature, a long way to go. I certainly wouldn't be, and we're not putting a lot of capital into those technologies today. There's a lot of investment required, and probably by large, well-capitalized industrial players in that area. We talked about small-scale hydro, which is the cheapest, which is probably around £50 today per megawatt hour. And then you have things in between, offshore wind, which is about, I think today, it ranges about, call it £150, so 2.5 times the cost of onshore wind. So big differential, a lot of room for improvement in terms of the cost of the turbines, the cost of the foundations, the subsea cables that need to be installed. So that technology is still far from being competitive. And in the environment we're in, there's clearly a trade-off between how much government support is out there for some of these technologies to get to be competitive. Clearly, here we have some fantastic onshore wind resources already, lots of projects in planning. That's clearly our best resource. We have some great agricultural resources here. So anaerobic digestion today, I think call it about £100, a little bit more than £100 per megawatt. So it's still more expensive than today's technologies in terms of coal, natural gas, and onshore wind, but we can see the cost curves coming down there, and it won't be that long before it's competitive. So that's sort of some context around, you think about, we have some fantastically competitive renewable technologies today. We don't need to wait for marine to come to save us all. Denmark is now, I think, 30% of their energy is coming from wind. Germany has about 25% from a combination of wind and solar and biomass. So very significant contributions to their overall generating capacity and consumption. So that's the supply side. I'll spend just a couple minutes on the demand side, which is where I think investors like ourselves spend probably more of our time, because the return on investment opportunities are much more tangible. So clearly thinking about smart buildings, building automation, that's a very fast-growing sector, probably one of the hottest sectors today in sort of the smart energy technology area. Demand response as an application hasn't really taken off in Europe, but certainly in the US has made some real headway, and I'll talk a little bit more about that. And grid-wide data analytics, which I think I'm sure we'll hear a lot about today, is clearly critical for us to manage our intermittent wind resources here and take advantage of the current assets that we have in this country. For most of the issues on the energy, the efficiency side that we see are not around the technologies themselves. It's actually much more around the markets themselves and the policies, the regulatory framework, and the business models. So, for example, building retrofits. There's still not a lot of very consistent legal frameworks around business retrofits. The ability to, certainly for public buildings, to procure based on a guaranteed savings program has only recently been introduced in the UK. It's very exciting. It's been incredibly successful in the UK. It's only just come here. And that's probably one of the best ways to finance some of these new energy retrofits in buildings. And another area that lots of countries are dealing with, which again I think will be a big part of the discussion today, will be how to sort of adopting a holistic policy about how do you integrate intermittent renewables into the grid itself. And then lastly, just talking about all the demand side resources and managing those and creating markets around those. So I know I don't have a lot more time, but I'll just spend 2 more minutes on, I think, the smart meters and some of these other energy technologies. The business case for smart meters has not been, I think, as compelling as it should have been. I think it's improving. The US has rolled out smart meters well ahead of the rest of the world. So I think they're 60% of the investment so far in the world. We're starting to have a rollout in the UK happening over the next couple of years. But in a country like Northern Ireland, the smart meters, the business case is more than just billing and CRM. It's about providing grid sensors that help us do the demand side management. That we don't have that intelligence built into the grid, and so we need to really incorporate that into the equation when we think about the return on investment on a smart metering program. And I think in this country it's the most important aspect to the business case compared to the other parts of the UK. I think we're going to hear a lot about it today, but the intermittency of wind itself, the volatility that it causes in the system, it creates tremendous cost in terms of managing the grid, and I'm sure we'll hear a lot about curtailment from Viridian today. When it's not even able to use some of the capacity that the energy we're generating ourselves because of that. So whereas in the last few years, maybe grids have been thinking about how do you squeeze that last kilowatt hour out of your generating capacity, I think a lot more countries are going to have to deal with, and I think one of the key issues for this country is going to be how do you increase the flexibility of your power plants to move basically up and down based on what's going on the renewables generating side, and also storage, which we'll hear about today, being critical for this country to try to match the times when generation is peak compared to actually the load and the demand side of things. It's usually the last few percent of the renewables that you turn on into the grid that cause the 25% of the issues. And so that's a key thing we have to deal with. Some countries are looking at how do you create local microgrids to actually just manage within particular areas instead of necessarily feeding energy centrally into the grid, but managing area and doing demand management in particular regions. I think that's something we could and should do as a country, and I'm sure we'll hear about that as well. Just the last thing I'll say is wireless sensors is a very interesting area, and those technologies, as investors, we're seeing the costs come down dramatically. and the ability to implement those across a grid to make it much more intelligent, to do distribution automation, so the substations themselves you can have much more control at a local level, as well as the sensors at industrial and other commercial facilities, buildings and homes. We see as a big trend and a place where we're spending a lot of time looking at investment.